Hello everyone and welcome for today's session. In previous session we were discussing about some important terminologies used in stock exchange, as well as we have gone through with the basic concept of capital market and capital market, primary market, money market, secondary market, etc. So before going further, let us check the difference between primary and secondary market. Primary market is a market where the securities are being offered for the first time for investment to retail customers, while the secondary market is a market where existing securities, those securities which are already with public, are continuously bought and sold. So secondary market actually provides platform for continuous buying and selling of existing securities. The other difference is related with which it deals. Primary market deals with new issue of securities, fresh issue of securities, while the secondary market deals with those securities which are already existed. The next difference, the primary market is a virtual market and it does not have any physical existence. It does not have any kind of building, any kind of premises located at a specific place, and it is a virtual market where the buyer and seller meets. It's become the primary market. It can be any office, it can be any broker's room or broker's office, it can be any corporate office or anything else. So it is a virtual market and does not have any kind of real existence, while the secondary market, the stock exchange, has a physical existence and it is located at some specific place. The stock exchange, there are major two stock exchange, NSE and BSE, and both are located in Bombay. So they have physical existence. You can go and visit both the market. The next is primary market actually provides the real capital to the organizational financial need. It is used to fulfill the various financial needs that arise within the organization. So primary market actually helps the organization to raise finance from the market, while secondary market does not provide any kind of direct capital to organization. By buying and selling shares, continuously trading shares in secondary market does not have any kind of advantage to company, but yes, it provides the liquidity to company shares. Without secondary market, primary market would not be possible. So it provides the liquidity to company shares so they can easily bought and sold, and the prices of the shares, that is the initial public offering, that are offered through primary market. The prices are decided generally by the management of the company. Of course, they need to fulfill the requirement of SEBI and they need to fix a specific price, wherein there is some upper price and there is some lower price. So price range or a price is fixed by management in primary market, while in secondary market the prices does not fix by management. Company does not fix the price, but market forces, that is the demand and supply, fix the prices, and these prices are continuously changing, fluctuating, while in primary market once the price is fixed, it is not going to change till the issue completes. Now the next is relationship between primary and secondary market. Just now we have seen the difference between primary and secondary market. Even though there are many differences between these two markets and both markets are working in totally different manner, still there is some relationship between these two markets. That is, both the markets are complementary to each other. It means if the issue firstly Firstly, if a company need to issue in primary market, then there is a need of secondary market, because without secondary market the public will not be able to sell their existing securities, and hence they will not going to buy from primary market. So there is must required secondary market for a good primary market. Similarly, if there is secondary market, but if there is no or undeveloped primary market, there is existence of secondary market, but if there is no existence of primary market, or the primary market is not so developed, in such a cases people will not be able to buy from primary market, and hence the secondary market becomes idle market, and there is no need or there is no requirement or there is no feasibility of secondary market. So in this term, both the market work as a complementary to each other, and both provide support for the development of each other market, and hence for any capital market, for any developed capital market and developed economy, a good primary market, a developed primary market and a developed secondary market is needed. So in India also, for development of capital market, a well established primary market as well as well established secondary market is needed. So in this way both the markets are actually act as a complementary to each other.